Hello and good evening, everyone. I'm Abhijit, and welcome to a new episode of Investing Fool. In today's video, we'll be talking about the Nifty Top 10 portfolio. Those who have been following this channel will know that we started this portfolio back in March 2024, and we rebalanced this portfolio monthly. So we rebalanced it on the 2nd of December along with our core momentum portfolio. But it is actually a hassle. That video anyway got around half an hour length, and it is a bit of a hassle to combine both into one video. So sometimes this video follows a couple of days later. So we'll talk about the Nifty Top 10 portfolio, and we'll also talk about one marquee stock that has entered into the portfolio this time. Many of you would have already guessed this stock. So let's just get started with the video. So first disclaimer that none of these stocks are to be taken as recommendations or financial advice. Please do your own due diligence and research before investing. The second disclaimer is that unlike the core momentum portfolio where I am personally invested, I am not invested in these set of 10 stocks. So that's another thing that I just want to. I have shared this before as well on this channel, but I just wanted to reiterate it. And okay, so let's get started at where we are at after the end of November rebalancing. So if we take a look at the market, the Nifty has had actually gone below its 200 DMA and has swiftly recovered. Now we are not sure how sustainable this recovery is, but currently we are hovering around the 24,600 mark. And in terms of the portfolio return, the absolute return, which is pre-tax, that has become almost the same as Nifty 50. So we were almost like 6 to 7% like outperforming Nifty 50 by 6 to 7%. All that outperformance has just gone away very quickly in this short bout of correction, and then this time correction that has followed since then. So in terms of, if we take a look at the portfolio here, so you can see that our absolute return has been 9.78% from the beginning, and Nifty 50 has returned 9.53%. There was quite a bit of alpha that had been created before the October and November mayhem started. So but here we are currently, and it displays a similar behavior as in our regular portfolio also, where a lot of alpha has been destroyed in the last couple of months. So whenever swift corrections happens, we just cannot sell stocks on a whim, right? We have to wait for our exit signals, and sometimes those signals come a bit late. It also many things also depends on your rebalancing frequency and a whole lot of other things, right? So typically it is seen that momentum portfolios, being high beta portfolios, they fall much more than our broader indices during such corrections, and that is what exactly has happened this time around as well. So we have two exits and two entries this time. We'll take a look at the charts of the stock as well. If we take a look at the exit metrics, these have largely remained unchanged apart from the average holding period. So winners, we have 41% stocks as winners with an average gain of 11.2%, and losers are 59% with an average loss of 3.9%. So while you can see that the 40% 60% split is almost the same as what we see in our core portfolio, which means 60% of our bets actually lose money, and we make all our money with only 40% of our bets, right? And but you see the difference in the gain and loss percentage. So the loss percentage, if I have to take our core portfolio, let me just take a look at the exits tab for our core portfolio. Our loss would be somewhere around 11.2%, right? And gain is 24.8%. So the gain is also higher in the core momentum portfolio. The losses are also higher, right? But if we take a look at the Nifty Top 10 portfolio, the gains are lower and the losses are also lower, which is kind of expected for the kind of large cap names that come in the Nifty top 10 portfolio. So in terms of exits at the end of November, we had Bajaj Auto and Apollo Hospital both exited. Bajaj Auto after quite a bit of time, and Apollo Hospital just after 1 month. Okay. Now, because Bajaj Auto Bajaj Auto was there since the beginning of the portfolio, right? When the portfolio was started on the 1st of March, Bajaj Auto came in at that point of time, and for such a long time, it has actually persisted in the portfolio. So it boosted the average holding period. It was somewhere in the late 70s to almost 91 days now. So every stock on average is staying for around 3 months in this portfolio. That is the way to look at it. But again, as with any averages, this is just an average, and there are a lot of outliers. Some stocks will just exit within the shortest rebalancing period, which is 1 month, and some can stay like Bajaj Auto for a long time. Okay, now in terms of the portfolio composition, if we take a look at the current portfolio, so we see banking and IT actually making a comeback. So HCL Tech and TechM had actually left the portfolio, I think, and then again came back into the portfolio. And then we have ICICI Bank, which has again it joined only in early November, right? So it's there only for a month. And now HDFC Bank, which is the marquee stock that I was talking about, that has joined this portfolio, and we'll discuss a little bit more about HDFC Bank later in the video. Along with that, Wipro has also joined. So now there are 3 IT names, right? And there are 2 banking names. So these 2 sectors combined have become now 50% of the portfolio. If we take a look at some of the earlier names, which earlier it was auto dominated, right? Much of the gains was auto dominated, primarily led by Mahindra and Mahindra, Hero Motors, and Bajaj Auto. Bajaj Auto left with a very small amount of gain. Mahindra and Mahindra is still there in the portfolio, right? It's not meeting our exit criterion or anything. It has given a healthy gain of like 38% in less than 1 year, which is pretty impressive. And the rest of the stocks just remain there as they are. BEL, it had left our core portfolio, then it came in the Nifty top 10 portfolio. BEL got included in Nifty this year along with Trent. And you can see the divergence between Trent and BEL here, right? BEL, after entering the portfolio, it has only been a month. It has given around 10% gain. Trent entered the portfolio in the beginning of October, and the moment it entered Nifty, it actually entered the portfolio as well, and just a few days after. And from then on, it has not had a very good run. It is down 18% from the all-time high, and within the portfolio, like after it has joined the portfolio, it is down by 10.5%. Okay, so banking and IT, many market experts are also always saying that banking and IT are probably the conservative bets to play on right now, and they are going to be they have been stagnant for quite a bit of time, and they could be the new growth drivers. We do not know. We are not in the business of forecasting, as I always say, so we will just take as per what price action and what market data we see in the market, and then we'll just decide our course of action accordingly. For those of you who are like unaware of the basics about this portfolio, so the exit criteria that any stock that falls outside the top 10 ranks, we just take that stock out, and it does lead to a large amount of churn sometime, but that is something that we have chosen to stick with for now. And in terms of the rebalancing, it is rebalanced at the end of every month. Okay, so now let's just take a look at the 2 outgoing stocks that are there. So we have Bajaj Auto stayed in our portfolio for 276 days, left with a gain of 13.4%, but at the top it was almost like a 40% gain. We lost a lot of that gain, and we can't do anything about it. Many people can say that, okay, you why did you not leave when it had fallen 5% or 10% or 15%? It's not that simple. You can always take discretionary calls, but those can turn out either way, right? You can sell a stock and then it can again go upwards. So typically we wait for confirmation on our exit signals. Whatever exit signals you have decided for your strategy, you will have to wait for some confirmation. You'll need to be patient with those stocks, right? Now Bajaj Auto has not like given any benefit of that patience. So when we were doing the rebalancing at the end of October, the stock had not corrected by more than 25% at that point of time, and it wasn't meeting our exit criteria as well, in the sense that it was still in the top 10 ranks, right, in the screener. So because it was in the top 10 ranks, we continued to hold on to that stock, and it would have been a very different story if somehow Bajaj Auto had recovered, right? But it didn't recover. It, like from November beginning also, you can see that it is completely going down, down, down. So now it has lost quite a bit, and even after this, like this green arrow shows where we had entered this stock at the beginning of March. We had entered it here, we went up full down, then we lost almost like a lot of the gains, and we even then the stock actually gave us 13% returns while exiting, which is, I think, good. It is like almost the same as the annual returns for Nifty, but it stayed for less than 1 year, right? Apollo Hospital stayed for 1 month, didn't do much, like 1%, 2% gain. So here we entered here and we exited almost here. It had, like, there is a lot of volatility that is being seen in this counter. And now let's take a look at the chart of our beloved HDFC Bank, probably the most discussed stock in all stock market related discussions across India, and probably the discussions of Indian equities abroad also, right? So it's a very popular stock. All, like, many of, like, I have owned HDFC Bank in the past, and many of you would have owned, or maybe still holding, or just now you have gotten into HDFC Bank, right? This relates to the last point that I wanted to highlight here, that not the last, the second last, that every stock can be a momentum stock at the right point of time. So you will often hear people talking about, okay, this is not a momentum stock, this is a momentum stock, but it all is a function of time, right? The stock that has shown the maximum price appreciation in recent times, that becomes a momentum stock when you are relatively ranking them with their peers, right? And HDFC Bank, for the first time after we started the Nifty top 10 portfolio, has come in the top 10 ranks of the of that screener, and that is why it has come into this portfolio. But if you look at the performance of this bank over the last 5 years, so from this starts from around 2020, this is the COVID drop of 2020, and the peak peaked around October of 2021. So if you look from October 2021 to almost November, which is more than 3 years, HDFC Bank actually gave zero returns. उसके अंदर merger का खबर आया, merger हो भी गया, right? Lots of things happened, but someone who is just holding that stock, they could have invested this capital in like something like Nifty, right, or Nifty Next 50, and they could have gotten much better returns. Of course, like, you can say that you are saying that in with a hindsight bias, and that's true, but look at the opportunity cost of that capital. If you have deployed, like, let's say, I don't know, like 5%, 2% of your portfolio to something like that, that 5% of your capital is just lying there, sitting there, 0% return. I mean, not beating FD returns, not beating inflation, just giving you 0% absolute returns for 3 years. That is the point that I'm trying to make, that is not a wise allocation of capital. So like in momentum, so as per momentum investing, right, we keep investing in stocks where we see the maximum probability of outperformance continuing, and here there is literally like no outperformance for a long time, and only recently you see that this peak has broken conclusively, and it has gone much higher than this peak, right? And that is what the market is seeing, and that is what the screener is seeing, and that is why we have invested in HDFC Bank as part of the Nifty top 10 portfolio. Now again, it can fall back, anything can happen, right? Anything can happen in stock markets, just like they say anything can happen in love and war. So similarly, anything can happen in the stock markets, right? So this can change anytime, but for now this looks a little bit promising, not not like doesn't show consistent momentum, but we'll have to reevaluate it like in a few months, right, on a regular basis. So that's pretty much it for today's video. Hope you liked it, and if you liked it, then please press the like button. If you haven't subscribed to the channel, then please consider subscribing if you like the content, and I'll see you in the next video. Till then, have a good day. Bye bye.